This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is London Fintech Podcast, episode 180, brought to you in association with Smart Pension and the unlistedboard.com. And I'm delighted to be joined today by Alessandro Zamboni, founder and CEO of Supply at Me, website supplymecapital.com, to talk about inventory monetization. Not a topic we have discussed directly before. Supply at Me free up working capital for manufacturing and trading businesses via a true sale of the inventory to a special purpose vehicle. It is always a pleasure to encounter fintechs that interface with the real world rather than bits in computers, and likewise, it's always interesting to see fintech maturing in the sophistication of the things that it encompasses. In LFP180, we discussed securitizing trade finance to make it an investable asset class with Christopher Gugelman, CEO of TradeTech. Supply at Me do a similar thing, providing a new asset class for investors, this time not via invoices of stuff that's already been sold, but via monetizing the stuff that hasn't been sold. Plenty to talk about, so let's get on with the show. Good morning, Alessandro. Thank you for joining me on the show today.
Good morning, Mike.
And you're obviously leading, apart from Supply at Me's incarnation, you're obviously leading a far more interesting life than me, because you're sitting in Italy, where it's been sunny in the UK actually, but I bet it's even warmer down there. Which part of Italy are you in?
I'm near Milan, Bergamo.
Okay, and we'll get on to Supply at Me in a minute, but Supply at Me are in how many countries or how many offices? Or
Yes, we are working across several countries. So we start in Italy, but now we are operating with a global footprint, basically.
Oh, interesting. Right. Well, before we get into the fascinating topic of inventory financing, a little bird tells me that in one of your previous incarnations, in your prior life, you were a musician or something. What did you play and when?
Yes, well, I was a guitar player. So for me, the guitar is also a way to think, to give also get new ideas. And I play the guitar since 20 years.
What type of guitar?
Acoustic, electric, all the phases in a guitar journey. Start with the classic, then acoustic, and then electric.
Oh, cool. So do you just play for fun, or have you ever played in concerts or in bands? Or
for fun, in the past, in the university time, we had also a group. We made also an album. So also for our dream, firstly, to have our music, to play our music.
Oh, that sounds very, very cool. So in terms of the gap between being at university, playing in a band and recording an album, and today being a CEO of Supply at Me, how did that journey go? How did you transform from a musician into a fintech founder and somebody who was fascinated by inventory financing rather than guitar strings?
I think that in common these two activities has the understanding of the rules. And also the importance of the rules. And after my period in university, I worked nearly 20 years in a regulatory advisory firm. That basically what we did a regulatory project for banks, insurance, the Basel IV, the Basel regulation, the Solvency II regulation. So my experience was focused on understanding how a bank is to be managed. The regulation, the capital adequacy rules, a very important experience considering the Supply Me initiative, because basically Supply Me initiative is gaining traction from constraints, limits of a banks in order to monetize or fund inventories. Is the reason because we decide to establish Supply Me.
I see. And when was it established?
We established Supply Me in 2017, firstly as a startup company in Italy, and then we move through the reverse takeover, in UK last year. And because we saw basically that SupplyMe has a global footprint and they offer the service is an interesting service for companies that can be operating across several countries, not only Italy. Italy obviously is a great country related to the manufacturing, but you know that the manufacturing industries or other trading sectors, also UK, the Europe, the Middle East are very interesting countries for us.
Yes, well, as I said in the introduction, on the podcast, we've covered quite a few supply chain finance, but mainly for fintechs offering supply chain finance to vendors who are selling stuff and they've sold stuff and haven't got the money, or for buyers who want to buy stuff from Bangladesh or clothing and they need financing there. But we haven't touched on before the subject of financing inventory or working capital, which has been an important topic probably for 4,000 years, if not more, but especially perhaps since the Industrial Revolution, in that if you are a manufacturer of tractors, you may build 100 tractors, you have them sitting in your warehouse, you have salesmen trying to sell them, but you've had to pay for all of the parts, all of the ingredients to go into the tractors, you had to pay for all the labour. And for those people not familiar with working capital, that's basically what working capital is. You need this money, and it's very easy for people in the modern digital age where the kind of almost the product is just bits, to forget that there are many businesses that need large sums of money to finance their business, and without working capital, as we saw in Eastern Europe for many decades, it's very hard to be a good car manufacturer because you're held back and you're trying to save money. So maybe we can just start with a little bit of the history of how this has worked in the past. So if I was making tractors, let me say, 40 years ago when I was at school, I left and I made tractors. I could not make tractors without capital, as I say, to finance all the bits I need and the tractors sitting in a warehouse before my salesman sold the tractors. So if we go back decades, and then we'll fast forward to the solution and the issues you've seen and the opportunities, how did inventory financing work in the past? I mean, you mentioned banks. I presumably would have to call a bank, and I'd call NatWest Bank and I'd say, hello, NatWest, I need some financing. They say, why? And they say, I'm building hundreds of tractors.
Yes.
So how did it work in the past?
Great. In the past, a bank, and let me to say also now, a bank has to understand firstly the counterparty, the manufacturer, the credit risk, the reputation, also the family, the asset of the business owner, and then they can't assess they were not be able to assess the tractors, but basically they saw the balance sheet and say, okay, I can finance nearly 20 to 30% of the value of your tractors. And in addition, I can ask also guarantees. I have to ask guarantees, personal guarantees from the business owner asset, individual asset in specific case. So basically, in a perspective of the business owner, the inventory financing plain vanilla, ordinary facility was and now is not a great facility, honestly. Because as I'm saying, there are a lot of guarantees asked, the advanced rate is very lower, and is a debt. The key important point is a debt. So in a balance sheet of the business owner, there is a debt to be refunded.
Yes, so from that, you explain it very well. Going back to what I said, which is I have the inventory and I wanted financing, the first point to bring out of this is that historically people didn't do that. We'll get to how SupplyMe does it right now. But historically, as you explain, if it was in the 1970s, the bank actually finances the company. It finances the company. It checks out what the company is doing in that. It's not so much interested in the tractors, but it looks at all these other things, the capital and the shareholders and personal guarantees and all these complicated things. So it's actually financing the company, which is a slightly different transaction. And manufacturing companies, of course, need large amounts of equity capital because banks will not fund ever 100% of anything for understandable reasons because they don't want to lose money. So bringing this forward into the modern world, what was it from your work with banks that made you think or made you understand that rather than banks just lending money to the company in the traditional fashion they have been for 100, 200, 300, probably 400 years, that there's a different approach, which is that rather than looking at Mike and his company and his family and the assets and guarantees and his house and all this kind of stuff, that you had an idea that, I think there's a way of financing just the inventory, not the whole company. So therefore, the company doesn't need guarantees, it doesn't need a debt, and of course there's terms and conditions on the debt. So if I borrow £1 million from a bank and I don't repay it, maybe one day the bank breaks my company and bankrupts it and sells everything. So all sorts of problems with financing the company. So what was it that made you wake up one morning, Alessandro, and think, I think that the inventory could be financed, and then you work out how to do that?
It's correct. Basically, we are moving from a cash-based approach that is typically a bank to an asset-based approach. And so the key point is to understand the marketability of your inventory, the tractors, an example. And for our point of view, and our value, the value of our service are two. One is that we are asset based. So we are not interested to your family, to your asset, to ask guarantee, because we are not a bank. Secondly, is not a lending, is not a credit, is not a debt from your side, is a commercial facility. You can sell the inventory to me, to the platform. You can monetize the inventory, your stock, your tractors via a true sales. And you can keep the stock, the tractors in your warehouse, on your premises, and continue to sell to your customers. And you are sourcing the unsold risk. If you will not sell the tractors to your customers, the platform will pick up the stock and resell to third parties. So this is the key point, is not a financing, is a monetization.
I see. Okay, so in all of this, as you will know, because you've been looking at the regulations for ages, banking always looks very simple from the outside, but on the inside there's lots of little details and lots of little twists and differences. So we spoke before about debt financing of the company as working capital, but also there is asset-based financing, which has been around for a long time, and then there are things like hire purchase and all sorts of complicated banking transactions. So moving away from the banking approach, what it seems to me, have brought to this more is a kind of a capital markets attitude. And obviously it may work well in some sectors and not others. If I've built my own tractors here, I'm probably not going to get a good deal from anybody, including Supply Me, because no one's heard of me, my tractors, nobody knows, and all that kind of stuff. Whereas I don't know which sectors, we'll talk about sectors later, but let's say I've got milk from cows or something, and I've got 1 million gallons of milk, that, their milk is pretty much milk, and I know there's different qualities, but it's a bit more simple. Or I'm digging gold from the ground or something like that, and we know what the gold is like. But let's put the details to one side. Let's just stick with the simple thing of tractors. So maybe we could just go over how this works. So historically, if you're doing working capital, the bank assesses the company, as we've discussed. Now, let's say there's nobody in the company, but there's just you, and you do everything, and you work 1,000 hours a day by some clever way. You will go and have a look at the tractors, or you will find out about the tractors and, this kind of thing. And let's say I've got tractors that are worth £1 million. Where is the risk being taken? Because let's say you buy £1 million of tractors from me at a discount, I presume. You give me £900,000 for the sake of argument. You then own £1 million of tractors. But you, or the platform at that point, has a risk on £1 million of tractors, because maybe they will never sell, So first of all, who owns the risk? Or is it you just a platform that does this transaction, and then an investor on the other side invests in that, and he takes the risk? So you buy you buy £1 million of tractors from me for 900, and for the sake of argument, you sell it to the investor at 850, and he owns that, and he's got the risk. How does that risk transfer work?
It's correct what you explained. Firstly, the platform has not any risk on its balance sheet. So Supply Me Capital and the subsidiaries is a pure fintech business. So we have no risk related to the unsold, the market risk of the underlying, like the tractors. The mission of the platform is to create a sort of bridge between the capital markets, So the investors, and you know that now the need of the investor-based professional institutional is moving to illiquid assets in order to get more returns, higher returns. And so the second mission of SupplyMe is to promote a new asset class for investors that can basically through notes, through financial instruments, can subscribe a financial instrument that has as underlying not credit, no receivables, no leasing, no mortgage, but the marketability of inventories. And this is a key point because banks are in for and has to manage the restrictions of the regulation. They have to reduce the credit exposures, and also they have to pay attention to the leverage of each companies that also take in consideration the COVID, each company is increasing its leverage ratio, so the debt basically. And so the banks will not be able to fund more this kind of companies. And the reason, because SupplyMe is taking nearly 1 year to educate the investor base to this new asset class. And so is a bridge between the capital markets and the client companies that need to monetize their stock.
I see. So in simple terms, you're a marketplace. Something comes in one side of the business and goes out the other side to the investors, and it's always matched. You've got buyers and sellers at both ends.
Just to note this point, because we talked about SupplyMe and the marketplace. Honestly, the marketplace is quite different, because the marketplace allow a seller to promote its products to buyers.
I see. So it's more like a listing board. It's more like somewhere that you go and people post, I've got a flat to rent. I've got a job going, and you're a pin board and they just pin it on there. And other people who want jobs or flats come along and they read your thing. Oh, I'd like £1 million of tractor risk. I see. Okay. So in terms of how the process works from one side to the other then, you mentioned special purpose vehicles, which are obviously very important in terms of capital markets and financializing things. It turns £1 million of tractors into a piece of paper with lots of sort of legal stuff and saying I own this and all that kind of stuff, and maybe rating agencies, I don't know, get involved and rate the special purpose vehicle. So who or what turns £1 million worth of tractors in a warehouse into a special purpose vehicle company and all the articles and all the details and all this thing and shares, and who does that transformation?
This is the key point, the role of the platform. The platform digitalize each inventory items and create digital legal binding certificates that the platform can package through vehicles into a financial instrument.
So do you create a vehicle for my £1 million tractors called Mike's £1 million Tractors, whatever the Italian initials are for limited or PLC, and then you sell all of that in one go, or you then sell shares in it? So an investor could buy 10% of Mike's tractors and 10% of Bob's hairdryers or whatever.
Right. Firstly, each vehicle that is segregated from SupplyMe by not only tractors but a portfolio of several inventories. So it's diversified. It's not concentrated on one company and one type of inventory of goods. So the vehicle purchases several inventories and issue a financial instrument that allow investors to purchase, to subscribe, for instance, 10%, 15% of a diversified portfolio.
I see. So the SPV, SupplyMe, is acting much more like a fund manager. So you're in this way, you digitize, as you say, by taking assets and turning them into a company and something that's a financial instrument. And you then sort of separately, just keeping it simply on a whiteboard, you separately have a department called fund management, and the fund management department sits there and said, oh, we need more tractors, and they buy some tractors or in that, and they want more hairdryers, we buy hairdryers, or they want more milk and they buy milk, and they create just kind of, not technically, but in simple terms, a kind of mutual fund, as it were, with lots of different assets inside them. And then then the other part of the process is that having created that, you, quotes, have a sales team or a board who say, oh, look, and here we've got this fund and we've got that fund and these are the assets underlying. Is that roughly how it works?
It's correct. It's really a fund. We decided this year, also considering the demand, our countries, so our diversified portfolio across geographies, to establish a fund. So it's exactly what you explained. It's also the reason because we decide to buy Trade Flow Capital, the Singapore initiative that we announced in March. Is also the reason of this acquisition is related to the opportunity to create synergies in order to have a global fund that has basically a global footprint and manage like a fund our vehicles and also allow the increasing of the funding capacity in order to monetize more and more inventories.
So that's very clear and it's very interesting and it seems very innovative. We've just been talking about tractors so far as a simple, understandable example. I would assume that this whole digitization, this whole financialization process would work better on some kinds of assets which are more liquid, shall we say, and work less well on, I don't know, works of art. Let's say Mike doesn't have £1 million of tractors, but he's done lots of paintings, and Mike says, my paintings in this warehouse, I think they're worth £1 million. Then the less liquid things, without a secondary market of any sort or purchase history, must be much harder. So in terms of what you've been doing so far, which kind of asset sectors are working well for this, and which kind of asset sectors wouldn't work well with this approach?
The mission of Supplet Me is to try to generate a liquid secondary market for each type of sectors. So now we are working on 16 sectors, and is a wide range because we are working from livestock to toys to wine, parapharmaceutical, capital goods as the example of the tractors, metals, because our model is different to the trade finance model that need commodities, they need high liquidable, high marketability inventories, goods. We basically for each transaction that is our client, we have remarketers, auctions. We create a secondary market in order to work with several sectors, different sectors, and also to support the real economy, because the key point is that all the capital markets industry want to see commodities in a trade finance, prefer to also as a very low risk appetite to this kind of transaction. And our mission is also the reason that is taking time, is that we are creating a secondary market for each type of goods. For instance, we are setting a transaction with a toys producer that buy toys from China, transform the toys or transform part of the toys and sell the toys through 3 brands across the Europe. And so they have a days in inventory, that is the time where there are not credit facilities in order to finance the working capital need. The days in inventory is nearly 100 days from when the toys are shipped and arrive in Europe. They need 100 days to sell through the point of sales across Europe. And so they need the opportunity is to monetize once the toys has been shipped in Europe and waiting to be sold through the point of sales. This is an example. Another example are wine producer, the Brunello supply chain or other high quality wine producer. And it's the same. This kind of producer also due to COVID has to manage, they haven't sold the wine and they need to manage the new production. And so it's important to monetize, to create cash, free up cash from their stock in order to allow them to prepare the new production.
I see. Well, it's very interesting that you've already, in a relatively short period of time, managed to find many sectors of the economy and actually help those. I mean, I'm wondering, going back to the wine producer, I'm a producer of port now in the future, in a few years' time, when I've retired from podcasting, and I'm up the Douro, and I've got 1,000 bottles of port. And I remember our conversation, and I think, oh, these local Portuguese banks, they don't finance very well, and but actually, I'm sure Alessandro will give me a good price. So I speak to you, I get a good price. So as I understand it, I've sold my 1,000 bottles of port to your special purpose vehicle, which kind of owns them, and it's gone in towards a fund, and then investors own that. So if I've sold my assets, this is a very simple, silly question. I probably should have worked it out before. If I've sold you my 1,000 bottles of wine, how can I sell it to somebody else? Because it's not my wine to sell. Obviously, I want to sell it to, I don't know, Oddbins or something in the UK, or whoever's a good wine distributor in Italy and all that. Do I have to buy it back from you?
Yes, basically, is the innovation of the platform is not only made by technology, but also the legal contracts, the accounting rules that are managing the transaction. So basically, thanks to Supplemi, you move from a principal view to an agent view. And so you sell to me, to the platform. Another important point, the platform doesn't buy a discount. The platform buy at your book value plus a margin. Because there is a very important point, is the economic substance of the transaction, in order to avoid any clawback risk, any legal risk. For sure, thanks to your bottle of wine, you have a contribution margin of 100%, for instance. And then I can buy your bottle of wine at the book value plus 20% of margin. So you are happy at day one. Then you continue to sell as an agent. And once you find a client, you purchase the stock, the bottle of wine from the platform at the same price, book value plus 20%, and you sell to the third party, so your client, and you achieve the rest of the contribution margin. And the platform will ask you a part of this margin in order to be paid for this powerful inventory monetization service.
Okay, well, I can understand that, as you say, the legal thing is very important here. We don't have time to get into that and how the contracts work. And also, like a lot of this sort of asset-based financing, it can be very complicated to manage because, you're sitting there in Bergamot and one day, actually port is a bad example, but anyway, one day you find out that sort of Mike's gone bust or Mike hasn't been trying to sell it, he's run away to the sort of Canary Islands or something like that. Now, port is a bad example because actually port lasts for decades and decades, so you've got a long time to wind down that asset, and actually that asset will probably appreciate over time, so a very bad example there. But the challenge of asset-based financing is that if something goes wrong somehow, then, and Mike just disappears off the face of the earth, then you've got an SPV with wine that has no agent trying to sell it. It's a bit like a bad debt where you've closed a company down and you've taken the assets and you've got to sell them off. So in terms of this sort of almost bad bank component, which is that, this company disappeared, we actually have got to physically collect 1,000 bottles of wine or something, or we need to find a new agent, or we need to rent the property. How does that kind of wind down process work? Very briefly, because I know it's very complicated, but just simply put for you guys.
It's important this kind of that the platform manages basically this framework. The platform has to prevent this event through the monitoring, weekly, monthly, depending on the type of sectors. The platform has to detect the event and react. So if weekly or monthly there are problems related to the commercial KPIs, because the legal contracts are very important, because we manage a sort of commercial covenant, information covenant. Through the platform, we monitor weekly, monthly, if there are a breach of KPIs, and in case of breach, our servicer, because we work with several servicers through the world. We are based in the UK. In Italy, we have a servicers. In UK, we have a special servicer. Act immediately, go to the warehouse The goods are our ownership, so we have no problem legally to enforce the contract and pick up the stock and resell to third parties that at day one already signed a binding agreement to repurchase all the stocks at the same price that the platform applied to you.
I see. So you've kind of got an underwriter at the end. You've got a reinsurance agent who reinsures the transaction, and you have the local services. And I get the KPI point. So for the sake of argument, you bought my 1,000 bottles of wine, and I signed some piece of paper saying I've got a KPI of selling 10 bottles a week or something. Can you measure it over a rolling month? And oh yeah, Mike was selling 15 last month, but now he's only selling 1. What's gone on? And your servicer goes around to find it. And then in terms of this legal stuff, presumably the servicer also has to manage, as with all commercial transactions, but especially banking transactions, fraud risk, which is one day somebody goes to check my warehouse and they find there's no port there. Mike drank it all. His business was going so badly. He was lying about the KPIs and all this kind of stuff. Oh my God. And there he is. He's dead in the corner because he drank too much port. But again, this fraud risk has also got to be managed and is part of the overall pricing and the commercial structure. Well, that sounds very fascinating. And it's really a very involved one. I mean, going back to my prior incarnations when I was head of risk and looking at all the transactions and asset-based finance and all that, for those people who don't work in this field, it's very easy to underestimate how complex it is to get all these moving pieces going. It's a very big machine. And as I said in the introduction, it's very fascinating for me and hopefully for listeners to find out that fintech is doing more and more complex things. It's not just like we do your foreign exchange dollar sterling transaction slightly cheaper, which is very good to do, but it's now getting on to more grown-up things. So before we wrap up the show, I'd like to thank all the listeners out there and my brand partners for the podcast. Smart is transforming pensions and retirement worldwide. Their leading-edge retirement tech platform propelled them to success in the UK. Now they're operating on 4 continents and working with partners like Zurich and JP Morgan. Find out more at www.smart.co. Theunlistedboard.com. Resources to help you start making your board an engine of growth today. So that's been very clear and very fascinating, Alessandro. And I now know a bit more about that than I do about playing the guitar. I can't even remember what the chords look like, and I never was very good in the first place. So a very complicated business like yours, you've got lots of moving parts. You've got agents. You need to find sellers. You need to find buyers. You need to find management. It's a very complex thing. So, in terms of the future for SupplyMe, what's the main developments you're expecting over the next 1 or 2 or 3 years? And what more do you need to make you more successful? If any of the people listening to this show have got them, because I assume a business like yours, it's like you're at sort of the centre of a wheel and the spokes going out in all directions. So maybe give us a bit more of an idea of the future, where you're going, where you hope to go, and what you need to get there even faster.
Yes, the company has to walk across 2 trajectories. The first one is to create a global inventory monetization fund. Because we are a lot of synergies, the capital markets is asking new illiquid assets with a higher returns and also want to help the real economy, and having an inventory monetization global fund is a very important need and opportunity for SupplyMe to monetize inventories for all our portfolios. That is huge. The second one is to create an offer, is the reason because we acquired the Trade Flow Capital Singapore business in order to have a sort of an end-to-end inventory monetization offering. So we can monetize inventory if it's in transit and if it's on a warehouse, on the premises of a client company.
I see. So I can see why some references have been talking about supply chain finance in terms of what you're doing, because if the tractors are in my factory, my warehouse, they're clearly my tractor. Well, they're clearly the tractors. But if they are on a container ship going to Singapore, and I've kind of sold them, then it's a slightly different matter, or just moving the inventory around. And you have many types of partners, some agents and banks and manufacturers and all that. What kind of new contacts or partnerships do you need to make SupplyMe even bigger over the next few years? What are you needing most at the moment?
I think that now that we are ready to deliver the transactions, the further transaction, it's very important for us to have an originator partner in all countries across the world. Europe, South America, North America, Middle East, we are ready to create a great ecosystem of originator partners that can also be banks, that can want to foster our unique monetization service to their customer base. We need to manage a great business expansion.
I can understand that. And on the other side, what process do you have for reaching more and more investors to invest in your fund or asset classes? How do you market the fund?
I think that having now a global funding structure, we'll have more opportunity to talk with a single, simple structure to investors. And we spent 1 year. The market is nervous, but we spent 1 year to educate several investors that now are ready. I'm sure that for this side, that is made by followers, basically, when we made the first transactions, we have the opportunity to talk in very simple way to the big global asset manager that will be interested into our structure that will be very simple. So we are reducing the complexity in order to allow the investor base to invest in our structure.
Excellent. Well, thank you very much, Alessandro. You've explained it very clearly, and I think it's a very interesting business you've got there. And as I say, it's interesting to see fintech getting more sophisticated. I mean, I've always, as somebody who's been a banker for many decades, proper banker in the past, I've always thought that fintech was important and interesting, but actually to an extent child's play. Fintech has started with the easy things in a bank. I mean, doing foreign exchange is easy. It's not easy to make a profit out of it, but that's a different thing. But there are the whole parts of financial services which are very complicated. Lots of operational risk. You need to organise lots of things. And success comes out of not doing a simple thing well, but doing many, many complicated things well. And you're like a conductor of an orchestra. You're standing there, you've got violins, you've got cellos, you've got bassoons. No guitars, actually, because you don't have them in orchestras, pity. and all sorts of things and pulling it together. So I'm really pleased to hear that fintech is going in that direction. I'm also pleased that, especially in the crazy world that governments have made over the last year, that it's a fintech that's helping the real world. Because we look around ourselves now, we're surrounded by physical objects. I'm surrounded by physical objects. My head may be in the computer all the time, but the world is full of physical objects, and we need the physical world to get better as well as the digital world. And you're doing a unique part in helping the physical world and the digital world. So I wish you every success in the future, and thank you for coming on the show.
Thank you, Mike.
Thanks for listening. If you're in need of a non-executive or advisory director with deep expertise, experience and contacts in the worlds of both traditional FS and fintech, or unique insight into how to make your board an engine of growth today, contact me at mike@mikeballiman.com. If you just need one-off advice in these areas, via clarity.fm/mikeballiman.
We could sit in a band there all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moon rise, watching a happy moon rise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. City goodbye. Watch the firelight dance with me. 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 Watch the firelight